Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is June 8th, and let's get started with the charts. Currently, we're trading about 103.28. Our support's coming in below us at about 103.20 to 103. You can see this upward trading channel that we've been kind of riding since early May. However, it looks like today we may have broken out of this trading channel. Now, if we can close above at about 103.40, we should be able to ride that channel some more and maybe with it bring some lower rates. However, if we don't, which I don't think we are going to ride this channel, we're going to probably trade flat for a while, guys, and we'll probably see about 103 and 103.20 as our support levels. Okay, so 103.40 is our resistance. We got to try to break above that. If we can close above that today, we're going to be in pretty good shape. So here's the reports. Jobless claims, I should say the report, because that was the only one. So jobless claims was actually helpful for a bond market, but much of the Dow and the bond market is trading kind of like weird just because of the Comey testimony. So anyway, we'll kind of continue to watch, see how that baby goes, but I don't think we're going to see a whole lot of movement for a while. Reports are pretty light for the rest of the week, so I don't think we're going to see, again, a whole lot of movement now that Comey has started to come out and already speak. So where are we at? Where are we going? So mortgage-backed securities last month traded on average about 102.85. Freddie Mac came out and reported the average consumer getting a mortgage last month got about a 4.01 rate and paid a half a point to get there. So that being said, if average bond prices last month was about 102.85, that's about 43 cents better from where we're at today. So what that means, that average consumer that was paying a half a point is going to pay much less, maybe 0.07 if our calculations are roughly estimated. So anyway, that's good news. How did I do on my last projection? It was a miss, guys. Bond market exceeded my expectations by 8 cents. So hey, I don't feel too bad about that. I would rather steer on the side of caution than get too liberal with stuff. But yeah, a bond market exceeded my expectations by 8 cents. So good for bonds. As far as analyst outlook, they're both pretty consistent. I think especially if we close below 103.40 today, which I think we will, we're going to break out of that upward trading channel and probably go flat for a while, guys. So we're probably going to see trading, I believe, go between 103 and 103.40. That's an upward swing of about 12 cents or a downward swing of about 28 cents. That being said, I would say if you've ridden this channel, it's probably about time to consider locking unless there's some kind of crazy news that you think that's going to come out with the economy. So I think it's about time to maybe cash in the chips and get everything solidified. That's just me, though. So that is your forecast. I don't think we're going to see much movement, guys. I think we're breaking out of this upper trading channel. Okay. If you would like, comments down below. We'd love to hear from you guys. Hit that like button. And if you want to subscribe to the channel, guy on the left. And if none of this made sense to you, Mortgage Bonds 101 on the right. It's a really awesome video that'll teach you all the basics that you should need to know as a consumer when you're trying to pick a time to lock in your rate. Anyway, that's it for now, guys. Have a great week. We'll see you next Thursday. Bye-bye.